Gold futures went crazy last week. They went through the roof. The US 500 took a bit of a knock and then recovered. The FTSE's under pressure. The Nikkei's under pressure. The economies are under pressure. Wars are breaking out. The world is ending. What's going to happen next? Well, we're going to go through the charts and we're going to have a look at what's been happening in the last week, what's going to happen next week, and what's due in the stock markets for the new week coming, because it's been such an interesting week trading. It's been such a fun week trading, and with volatility comes profit, because if you have volatility in the markets, you can actually make money. And for those of you who know me well, for those of you who understand me well and have been following my videos, you would have learned my little secret about volatility and the VIX. Some of you will know what I'm talking about. Others who haven't watched the videos won't know, and you'll have to go back and find my little secret, which is for the members that join and for those who follow and subscribe my videos. Guys, we're going to go to the charts, we're going to have a look, and then after that we're going to discuss your fear in the markets and the most simplistic way to get around that and make profit while trading, to become a profitable trader and actually make good money in the stock market. After that we'll get to the free gift and what the free gift is all about, and the trade of the day every single day. Don't forget, trading is risky. 80% of traders do lose money, and if you don't like losing money, rather don't trade. Simple as that, really. I always tell you guys that trading is a 50-50 game. Most people don't agree with me, but those who don't agree with me will eventually, one day, when they get to my age and they've been trading for as long as I have, 30 years, they'll get to the point where they think, maybe I should have thought about that. Trading really is a 50-50 game. There is no magic system in the stock market. There is no magic way to make money in the stock market, and there is always someone there waiting for you, waiting to take your money. Either you learn that trading's a 50-50 game, you learn my strategy and you learn how to get around that, or you just keep plodding on with your so-called fantastic system, which waits for the moon to turn green on the left and the stars to align on the right before you can get into a trade. But without further ado, guys, let's go and have a look at the charts, and let's go and see what we've got in store for you next week, not to mention what happened last week in the stock markets. Let's have a look at the last week and see where we're going next week. Now, keep in mind, I'll be making this video on the Friday for you to watch on the weekend. Some of these prices may be a little bit outdated because the US market, for example, basically runs quite late into the night on my side of the world. So I won't be taking the prices out of that. But yeah, look at the US 500 last week. Nice jump up, big run up. Will it break through the resistance or not? Not sure. But if it does, it'll run like gold. Gold had a good run, and I always said when it breaks through that resistance, it's going to run like crazy. I am a little bit concerned. I mean, I know I don't normally play into the fundamentals and things like that, but the world isn't looking the strongest at the moment, and the economies are a little bit weak. So yeah, that said, you know, I'm playing more into the short side and a correction side for now. But as we get closer to Christmas, it'll probably go long again. So for now, short term, most likely staying short, and it'll probably come off of this resistance and give us another correction before it goes long again. The Nikkei, I don't normally trade into the Nikkei or the Japan 225, but it has taken a negative turn and it is going down. Now, the main reason I won't normally trade into this is because it runs during the evening when I'm asleep. That's the Asian markets. But you know, if you look at it, it is in a bearish sort of trend at the moment. The economy in Japan is not that great, and there has been a lot of talk around it. There is a strong resistance level sitting at the top here, and it also gives you a kind of a double top scenario on the 4-hour chart. So that tells me there's a very good chance that this could still continue on short down to the support level. So Nikkei looking short. Last week we had a trade in the FTSE that was short, and here we go, still short, still going down, and we expect, similar to the Nikkei, it's going to keep on going down until it hits support. It's actually a very, 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 very similar trade to the Nikkei. So that were the indexes. Let's go to the Forex and let's have a look at the Forex trades. The Forex trade, the Euro US dollar, did go nicely long, and as I said to everybody just a day or two ago, if you go long on this, watch out for the trend that's running along here. It'll probably hit that trend resistance and maybe come back. So move your stop losses up close into profit. And if it does come back, you don't lose anything. But if it carries on to the main resistance, you make all that profit going up to the main resistance as well. So the euro US dollar is still looking bullish, but could turn around and come back on that trend resistance. So do watch out for that, particularly next week. The Great British Pound US dollar is very similar. You see you've got this bearish trend. So you've got a trend, a resistance over here, which it'll probably hit and maybe start coming back as well. There is a double top up there. And it is very much a, well, no, it's not actually because you've got that there, but very much at the end of the day, there's a resistance there at least. And that resistance is the next resistance after the trend resistance that it might hit as well. So the risk to reward on a long is not that good at this point. The risk to reward on a short is probably looking a hell of a lot better on the Great British Pound US dollar. We were on the Euro Great British Pound, but as it did nothing, we're in a wait scenario with this. There is no trade here really. It's just kind of dead. So we're leaving the Euro Great British Pound for now. It was always a nice one to trade, but at the moment it's just teetering around and not doing very much. The US dollar CAD has turned long. It's broken structure, but there is a big resistance here on the 4 hour at the top. So your risk to reward at the moment is not that good on a long, but the structure is telling me that it is going long. So longs are preferred on the US dollar CAD at the moment. We are looking at the commodities as well. And if you look at Brent, crude oil, we'll get to gold in a minute. If you look at Brent, we had this long bearish downtrend and now it's turned and started to go up. It's starting to break structure here. If it breaks this structure nicely and gives you a long green candle out, you can probably go long on this again all the way up to the trend resistance. Risk to reward doesn't look too bad, but you are going against the macro trend. Just remember that the macro trends can be quite tricky. So watch out for that if you are going long. Shorts are preferred on Brent, and I would wait for the short to come off this trend resistance at the top here. Maybe go back down again. But if it gets to there, it has kind of broken the structure for now, and it does seem to have gone into a more bullish phase. It normally does turn it around these prices, and I did try and take a long trade on it last week, and it failed, so it didn't really work out for us there. Then the gold, as you guys know, I told you guys if it breaks through that level, because it was trading in that range, and this was a flag pattern. I told you guys if it breaks through that resistance, it's gonna go. And off she went on the tangent and she flew away. For those guys that weren't in the trade, I did offer you the opportunity and say, look, if it came back to retest and went up, that would have been great. But it hasn't come back to retest. It's just flown straight off into the moon. So unfortunately, guys, you've missed out if you weren't in the trade. Most of us were in the trade down here in the 25 levels, and it was quite tricky because it had hit this resistance many a time, and there was a good chance that it was going to come back again. But it broke through the resistance and it flew to the moon. So what are we going to get next week? Well, if I look at gold, I would say that it's either going to continue to knock the lights out, but that's obvious. But I would say we will get some kind of a pullback in because nothing goes up in a straight line. And if you get some kind of a pullback to maybe these levels down here at 25.40, 25.50, you might get the opportunity to buy into this trade and continue on long with it. But it looks like gold is heading for the moon. Next week on the US 500, I would say, guys, just be very careful of your long trades. I would say it's going to hit this resistance, most likely correct, rather than breaking through that resistance level. But you never know, eh? Market's a 50-50 game. Trading's risky. We all know that. We all know that where we stand with trading. The FTSE, I would say it's going to continue on a downward spiral. The UK market is just not looking like it's going anywhere. So I would say it's most likely going to come down to the support level before it goes long again. So I don't think the FTSE is really going to go anywhere in a hurry. And as I said with the Euro US dollar, your favorite trade where you guys were long, I would be very careful about taking any more longs. At this point, I would say move your stop losses up, move it close, because I think next week it might just give us a bit of a short trade again. So yeah, I think let's just leave it at that for the Euro US dollar and say that we aren't going long or short at the moment. I'll go short if it hits that trend resistance and gives me a clear red candle going down and a clear signal to turn around and go back down again. The Nikkei, I would say the Nikkei stands a very good chance of continuing on going short. I don't see it really turning and going long right now, although it was trying to create some structure here and go up. It hasn't broken that resistance there. So I would say, I think next week as well, it's probably going to remain short. So now you've seen the chart, and now you know how we went last week, how we're going next week, and what the plan is, and how things are going to go. Don't forget to come and watch my live videos where we trade together and we do the Funded Trader Challenge together. The Funded Trader Challenge I took on because so many guys out there are doing Funded Trader Challenges, and they were looking at my simplistic system and saying, can that actually work on a Funded Trader Challenge? Because, you know, we've got all these rules and we've got all these stop loss rules and we've got all these holdbacks that we just can't trade with a system. So I took on a challenge to prove to you guys that you can actually use this system on anything, and you can use it on a Funded Trader Challenge. If you're interested in a Funded Trader Challenge, I'll put the one I'm in. The link is in the description as well. Go and have a look for yourself, guys. They got some specials running at the moment as well. If you don't know what a Funded Trader Challenge is, it's the first time I've ever taken one on in my 30-year career as a trader, and I only did it because I'm doing this YouTube and I'm trying to teach people how to strategically make money in the stock market. And I just wanted to see if it's possible, or if people are held back from passing these challenges, or if it's actually possible to pass one of these challenges or not, and if you can do it with my particular type of trading system. The reason I like these guys is because you're allowed to hold your trades overnight, and that's quite important to me. And I'm allowed to trade with my system, not using somebody else's system. There's a lot of these guys that force you to trade with their system, or actually force you to sell out on the same day and be a day trader, and that kind of gets you to blow your account. There's been a lot of hype around these guys. There's been a lot of stories with guys not paying out and companies going bankrupt and all that sort of thing. So it's a bit controversial, these guys, at the moment. So we're just trying it out, and we're just going to see exactly what happens. But I'm rambling on at the moment, and I wanted to talk to you a little bit about the fear when you're trading and the strategy. Now, the whole strategy is, guys, is to lose less on your losses and win more on your wins. And that's the important thing about trading, is understanding that if you lose less on your loss and you make more on your win, then it doesn't matter what your strategy is. It doesn't matter how good or bad your strategy is. You should make money at the end of the day. And that's simple because of the 50-50 principle that I put forward that nobody believes in. Everybody thinks their system's got an edge, and everybody thinks their system should win 7 out of 10 trades, which it can. The system I'm showing you can win 7, 8 times out of 10 if you take small profits like everyone else. And that's the problem. The idea is to get your mind around, because it's all psychological, to get your mind around the fear. Two people can trade exactly the same system. One will be profitable, one won't. And that's the whole point here. It's not about the charts. It's not about the system you're trading with. It's about the strategy you apply to your system. And the strategy is so simple. And that is, what you got to do is you got to say, every trade I take this week, I'm going to put a $200 risk on. You can put a $1,000 risk on. You can put a $10,000 risk on. I don't care. I'm just giving you an example, because I think a lot of you will probably trade with maybe a $200 risk. So I'm just saying, say you can put a $200 risk on every single trade you take this week. And what you got to look at is say to yourself, I'm paying $200 for that trade. That's it. End of story. Whatever happens, I'm paying $200 for that trade, and then I'm walking away. And then you can decide what kind of profit you're going to make. And it has to be at least 400 or 2 to 1, let's say, and more if possible. Now what you do is, when the trade is running and it's running into profit, which hopefully it does, sometimes it doesn't, and you pay $200. If it runs into loss and you pay the $200, don't let fear overcome you. Don't follow the trade down. Don't move your stop loss. Don't try hedging down, because it will catch up to you. These things will catch up to you. What you do, you take the $200 loss and you walk away, because that was your invalidation point. When you put the stop loss in, look at a point where you say that will make the trade invalid. That's your invalidation point. But when the trade goes into profit, and let's say the trade goes a nice $200 into profit, then don't take profit. Don't jump out of the trade. Move your stop loss up to cost, or just above cost, whatever, and then wait and see what happens. Be slow to take your profits. Be very slow to take your profits. Be fast to take your losses. Then if the trade keeps going up, just keep moving your stop loss up so that it's always that $200 away from where it is. Okay, so if it's, let's say that $200 is 50 points on the US 500. I'm just using that as an example. then you don't want to be 100 points away on your stop loss when it's in profit. You want to be 50 points away again. So just move it back to that 50 points behind the price and just keep moving it up that way. And eventually, if it does come back, you either make a profit, but you don't lose anything and you haven't lost a cent. Once you move your stop loss up to cost, you've actually gained $200 because you paid $200 for the trade and now you've got the trade for free. Just think about that. Now your trade is completely free. With a 4-hour trading or the 1-hour trading, which I like to trade, you've got more time for yourself. You can walk around, you can go shopping, you can do your thing, and you can leave your trades running in the background. Now that's the strategy. And I know a lot of you won't agree with the 50-50 principle, and I've explained it in all my videos over and over again. So guess what? I'm not going to do it in this video because it's just going to make it too long today. This is just the weekend roundup, and I just thought I'd just give you that little bit of advice while we're here. Don't forget your free gift, the free Forex book, which is in the description, and it's there for you. It's a little PDF. Go and download it. Just about trends and trendy and that sort of thing. You don't have to pay for it. It's all yours. It's there. Go and grab it. Go and enjoy it and have fun with it. And also, I put my trade of the day out every single day on the blog, and it's just trading ideas. It's not trading advice. I just give my idea so that you can see what it looks like against what you're doing and see if it fits into your plan. For the members, I actually do put a video out every day when I can, and I also give the list of all the trades that are available or which way I think those trades are going to go on any particular day, because on my other accounts you sort of have 10 trades open and 5 of them will win and 5 of them will lose. Think of it like a coin toss. There we go, guys. Let's see what happens next week. Don't forget to come back for Monday's video, where we are going to talk about why you suck at trading and how you can get over that and how we can make you profitable in the stock market. Thanks for watching, guys. Don't forget to watch the last videos. Till next time, cheers, thanks, and bye.